brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas. He is a brand architect who is steering a major corporate transformation. Alok Rungta, MD and CEO of Generali Central Life Insurance. With over 25 years of experience in the financial landscape, he is a seasoned chartered accountant and a visionary leader. In an era of rapid change, he is the strategist behind one of the industry's most significant brand evolutions. From reshaping identity to deepening customer trust, he is redefining what it means to be a lifetime partner. Using cutting-edge tech to humanize the insurance experience and scale brand loyalty across India, he has mastered the art of the rebrand. He is our Brandwala. Hello and welcome to a very special edition of the Brandwalas. I'm Krishnakumar and we are in conversation with Mr. Alok Rungta, MD and CEO of Generali Central Life Insurance. Alok, great to have you with us here on the show. I'm going to begin not by asking about Generali Central. Let's talk about life insurance per se. Such an important product, a product about which there's been so much messaging for decades in this country, right from the beginning of Life Insurance Corporation of India to now with private insurers coming in. Despite all of this, the penetration of life insurance is so low in the country, even today. Tell us, how do you deal with that exactly?
See, firstly, we have to understand, and I keep on saying it in many forums, that our ethnicity is not of someone who are fearful people. By nature, Indians are ambitious. By nature, there's a lot of entrepreneurship, even in the employment segment. So our absorption of risk is very high, right? So in India, there is a common phrase called "ho jayega." We'll manage. So what happens in that kind of a syndrome? People are not looking at risk management proactively. Mostly it's a reaction.
Not proactive.
Not proactively, right? That's first contour because that's the area we work on, right? Financial risk management. Let me be very candid. Financial risk management. Second, financial planning as a concept is still weak. RBI through the banks have been pushing financial inclusion, there is a SLC structure all across. Still, inclusion is reaching there. We have opened Jan Dhan accounts and all, which is inclusion. But how many people understand financial planning? I'm talking about the white collar. For blue collar, let's not discuss, let's not go there.
Ball game altogether.
Okay? So these two combination has not helped a product like insurance go in. Right? And then we are in a market which is BFSI. So you are competing with so many investment instruments. Right? I think these are the core drivers. The recall has not been as great. The penetration also, while it has been there for 100 years, it was one institution. What was the reach? Now in 25 years, reach would have gone there, but still the reach is not good. So banks have reached earlier. So FD from a recall has a very big recall. Na?
Even today,
right? So I'm saying it's also about reach, it's also about ability. And then the notions of this understanding of why do I need an insurance product? I have many other products from a financial planning where insurance differentiate. I think that's the awareness which industry has to work on. It's not about the company, it's not about the product. I'm telling you, the bigger job is that industry has to really make it relevant by saying, why do we want a customer to know the segment we represent? And that awareness, if you ask me, is not deep. And unless it reaches the segment, it reaches the last mile, it will not be there.
Alok, interestingly, life insurance as a category, as a product, is built on trust.
Yeah.
Right? But it has very low everyday engagement with the potential consumers and customers. What do you do at Generali Central to make and keep your brand relevant to the consumer, to the customer?
Actually, you are hitting the nail on the head. We are in a long-term product. We want a customer to stay with us for as far as possible. Our product promises a 15-20 years return on money they would have paid over a period of time. And I think that's the challenge which a lot of us are facing, that in a consumer today who is more intuitively responding to immediate gratification. You know what I'm saying?
Yeah.
So the generational change which is happening in the mindset of a consumer, we are becoming a spend economy. So I don't have to say that more. Right? Second, consumption driven. Second is instant gratification has become a big thing. I'll make X money in FNO. I'll do this. You're talking about 10 years. So category itself creates barriers. So in that, this is the most important point, that how do I keep my customer engaged? So I'll give you one example, which is a very interesting example. If you look at the number of products which have come now, these products have a feature of, you can offer a income back from first year itself. The reason of that, it's not about the customer wants income. I will have more engagement points with my customer because I'll have to pay something every month or every year, and there are options like that. But because of that, I'll have more interaction with my customer. See, traditionally what happens, I buy a policy today, my premium is due next year. So 12 months, the guy is out of window.
No engagement.
Correct? So product innovation is also leading to many engagement points. One is that. Second, we have been waiting for this vast opportunity, which now I think with the new act has come, where we can do a lot of engagement products bundled in for a continuous engagement. I'll give an example. A lot of us have been evaluating. We are in a business of also keeping people healthy, right? Because we want them to be healthy, live longer. What can we give them on an annual basis for a basic health test? Just to keep engagement. Right? So these kind of product centric, suppose I'm dealing with the pension category. What can I do with the pensioners to stay engaged with me while they are on the product? So a lot of these value-added services now, because you can price it also, you can do all those things, is where the industry is working. And I've seen Southeast Asia, people have migrated to that model. Because I said, you have to have the mindset, right? And high engagement. Especially, as I said, it's a long tenure, right?
Yeah.
We are not selling toothbrushes and toothpaste ki ek bar bech aur aage nikal gaya, right? It's a very long duration cycle, right? So engagement is the key. And for that also, you need to understand customer category. Sometimes it's product category, sometimes product customer category also.
That's why I wanted to ask, while you're talking about all of this, how do you see the way, this is as far as people who are even coming close to the communication that, life insurers are putting out. There's a huge part of Bharat which doesn't even come close to this engagement to even receive the message and process it. But, they are engaging with life insurance as a subject today, because post-COVID, now there's a war, they're engaging with the idea of life insurance. How do you think companies need to evolve to, that curiosity has been evoked, but to match it with what you have to offer? How do you think, brands in India need to evolve?
So I'm very happy you raised the point, and I have written on one of my LinkedIn blogs that we need to move to Bharat. So in 25 years, Krishna, we have covered metros, we have covered tier 1, and I think the penetration there is much better than the average, right? But if you look at our business, and we have been very closely looking at our business, more than 55% of our business is coming from tier 2 and onwards in our business.
Even today?
Even today. I have been traveling extensively. Means in the last 2 years of my being in the role, I would have traveled to 100 cities in India. So you can imagine tier 1, tier 2, sab ho gaya. But what I see there is opportunity. It's not the same. We can call it Bharat for that sense, but I'm telling you, you're so right. Awareness is there. Disposable income is also increasing. Right?
More important.
I go to these towns and my impression on paper. Recently, I was on a tour to Bihar. You won't believe. And I'm not trying to make up any political. I didn't face any road issues. The Bihar in our mind. I went to Jharkhand. Some of the towns in Jharkhand. I was in Dhanbad, for example. Now, I would have had an impression of gangs of Wasipur when I talk about Dhanbad, right? You go there, you see the multi-story buildings have come here. So where I'm coming from is, and then look at the number of brands which have arrived in this town. these are surrogates for us, right? See, if my consumer has disposable income and if they are looking at brand, means the appetite is there.
Yeah, to receive brand communication.
Correct. And if they are looking at brands, whether it is a clothing brand or it is a utility brand, that means the market is open. So one of the benefit of a spend economy, it gives you indicator of where the disposable income is high, right? And I saw a large traction there. So we actually are expanding a lot of these places. In fact, we were discussing one of our teams who specializes in tier 3, tier 4 only. We have a team which only opens centers in such places. We are discussing places like anything. They want to open in Hajipur, Ara. So they are not discussing Bombay, Delhi anymore. The competition is also maverick there, to be very candid. And here these centers, it's a very easy getting into those places. You are going to offer employment, right? So that's also there. So and these places have graduates now. These people have learning people now. Education has reached, right? So you can get people also. So I think, and that's what I said in my latest one of the blogs, that Bharat has arrived actually. We need to go to Bharat. So one of our attempt is to go as much as possible, because obviously you will have an advantage if you can be there early. And we are very confident about that. In fact, we are all our expansion is in that area. I'm not a big believer to expand in metros anymore.
Okay.
And some of the results encourage us.
We're talking so much about brand and brand communication. Let's talk about your brand then, Generali Central Life Insurance. Generali Central Life Insurance has been through an intense rebranding process over the last year or so. You're going to complete a year soon. I'm going to congratulate you in advance for completing a year of Generali Central Life Insurance. Tell us, how has this been over the last several months? How difficult, how challenging, and how rewarding?
All three in one sentence. No, see, we were waiting for this for some time because the relationship was cooking up, and obviously we wanted, when a big brand like Central Bank becomes a stakeholder, we wanted the brand also to be carrying that brand. We just spoke about trust. So for us, the best thing is, we are a unique organization among few only in insurance where one of the parent, which is a foreign parent, is 200-year-old legacy. The Indian parent is 125 plus years old legacy. So we have a combined legacy of 300 years and a beautiful combination of East and West. Correct? Now, we just spoke, it's a trust segment. Correct? Now tell me what more you want on trust. Whether shareholders combinedly have 300 years of existence. So to cut the long short, it has been received very well. Right? Obviously, the team had to work very hard of how to bring these two together, because see, when you have two stalwarts, you have to ensure that the byproduct is also as good or better. So we had to work a lot on what the name should be, how do we put it. Good exercise, I think so. But what I can tell you is, if you look at, and one of the way to look at how the brand has been received by people is, has it really contributed, right, in terms of like a retailer marketing team, can you calculate the ROI on marketing, something like that. Too early for a brand like us, but our business has just for last 6 months grown at 100%. We are doubling our business, correct? And whenever I've gone to these places, as I said, I've been traveling a lot.
That speaks a lot about penetration also.
Exactly. and again, it's coming in Bharat. So when I'm talking about growth, it has really come in those markets. Again, because the brand is more resonating there as well. See, Central Bank has been in India for long. It has been a businessman's bank. It's not a salary class bank. It has been MSME's bank, right? It has been traders bank. So it has resonated a lot with that class. And we see resounding, because any guy I talk about, or any village I've gone to, any town I've gone to, Central Bank, nobody would have heard as a Henny. It's a generational bank, right?
Yeah. Legacy.
So that has given us a very positive spin. And then it has just multiplied the trust quotient.
That you have a global giant.
You have a global giant with a massive reputation of a legacy. So it has come out very well for us.
Fascinating. You call yourself the quote-unquote lifetime partner of your customers. That's your thematic messaging, so to speak. As that lifetime partner, which means that you are consistently engaged with your lifetime partner, and and conversely, throughout their journey of from getting the life insurance to eventually getting the payment and beyond, probably in that journey add on to multiple life insurance policies also.
Correct.
How do you play this long-term engagement game? What is the strategy at Generali Central Life Insurance?
So let me first add to it. A lifetime partner notion is not only with customer but with distributor also.
Okay.
Because see, we are a distribution.
Eventually, they are the touch point for the consumer.
They are the first brand. I always say, my distributor individually is also a first brand because he or she comes in touch with the customer first. And then they bring my brand to the customer, right? And that can only happen if the customer trusts this brand first, right? So they are a bigger brand, sometimes I say, because trust starts with the seller first. Yeah. Then the organization also chips in, right? So our lifetime partner is both way. Obviously, with distributor, we have a lot of plans where we reward them beyond a year incentive. So we have created a lot of lifetime or long-term programs with them to stay with us and be engaged. One thing we have also seen, the longer the distributor is around, the customer also sees that loyalty. So there is a good interaction between the two loyalty. There is a deep interaction with the two loyalty, right? So first the distributor. Second, obviously the customer. I just spoke about this engagement, but otherwise also the segment. So there is another segment which we try hard to work on, which is the first-time worker, the gig economy. So again, insurance has not been great in the gig economy. Our average customer age has been 40, 45. That's where the category hits. Maybe that's maturity, that's experience.
That's when the fear hits, I think.
Risk, let me put it that way. I just said risk hits, or it's also an age where you start thinking about planning on finances.
True.
Because mostly married, you have kids, so you need to plan better now. The lifestyle goes through a change in that sense, right? We all go through that.
I was about to say, not just insurance, that's the age, average age for Indians taking their first overseas trips and overseas holidays also. It's the same age group.
So
lifestyle does go through a massive change.
So that customer segment, if you're not engaged, you're out, right? So we are trying to do a lot of this hyper personalization with them to understand them better, right? What can I do in the moments of aha for them? So still, it's a theory, but what can bring that? And that's why I was saying we need to work on this value add a lot, right? Look at engagement point, look at points where he or she looks at us. So the normal stuff like birthday greetings, we are trying to attend. So at least we know some of the moments are key in their lives, right? Milestones. So at least we are trying to keep in touch. Because you don't want to go to them, today, boss, today's premium, just pay me. Because then, we don't develop relationship, then it's transactional, right? And if you want partnership, you want a deeper partnership rather than transaction. True. And it has to develop through relationship. So can we have more relationship? Second, we have a loyalty channel which only sells to our current customers or customers who has been with us. So we do a lot of cross-sell and upsell, okay, to our current customers, because that's another way to engage. See, in this industry, there is a lot of attrition also. So there could be a lot of orphan customers also. So we realize if our distributor is not around or the seller is not around, obviously my engagement goes down. Correct? And that's the whole myth, right? How do I keep engagement, right? So that's why we have a loyalty channel, which ensures that the engagement of customer doesn't go down. And we are not touching only at renewal points. So there are different ways in which you want to engage with different customers, as I said. And then I think the biggest thing is going to be the way we are going to soon launch a value-added service also on different customer category or product category or need category.
Oh, okay. Specific to that category?
Category, yes.
And that customer?
Yeah. Or a product category. Like I said, if you are a pension product category.
Correct.
Or if you say you have gone for a child product category.
Oh, this is only for those customers?
Yeah. Because see, the need is different.
Correct.
You would have bought a plan with me for a child need. So I need to engage you in that fashion.
Correct.
But if you bought a plan for a pension need, in the same age bucket, by the way.
Oh, okay.
So you are the same individual also and you have needs, multiple needs. But the engagement could be very different. So that's the way people are looking at, and that's the way we want to do it actually. More sharper, but more specific.
So for Generali Central Insurance, what do you think is going to be driving growth going forward? Is it going to be product innovation? Is it about distribution expansion? Is it about deeper customer engagement per se?
See, customer engagement has to be deeper. Otherwise, customer will not stay with you for long. So that's clearly there. But I think at the stage we are and the size we are, we need to expand. Distribution is the name of the game, correct? But I think again, you will capitalize the distribution better if you do something different. So my answer is we don't have a choice.
We do all three.
You do all three. Now, somewhere this comes first. In some segment, the other thing comes first. So there could be some segment differentiation, right? That, like I said, this is another thing. I don't think many people are doing this, what we are doing in terms of for this segment. So there is innovation on the platform. There is innovation in the way we approach it, right? But that's also distribution for me. So sometimes we'll play together. Sometimes it will be only brick and mortar. So, but we'll have to, for organization with our aspiration and where we stand today, we'll have to be there in the game.
Okay. I have only one thing to ask now about the future. We are here after a lot of struggle, especially for the life insurance category. Today we're calling this under-penetrated, at least as a term. I don't know what it was called 25 years ago. What is lower than under-penetration I don't know. But today we are here under-penetrated, and growth is very good, in terms of the sheer ability of companies like Generali Central Life Insurance to keep increasing penetration with more and more the customer base widening with every passing financial year. What will 10 financial years down the line look like in India for life insurance as a space?
I'll tell you some anecdotes I have. Okay, see, today our penetration is between 2.7 to 3. It went above 3. It's between 2.7.
That's what I'm asking. What was it 30 years ago?
It's a good question, and I should have done my homework on that. I've never reflected on it.
Okay.
But I think it was sub 0.7, 0.8 is my memory.
Wow.
But I may be wrong. But I can.
It's a logical guess, actually. Yeah.
Now, my point is, see, in a developed economy, the average penetration is 7 to 8%. Okay. So let's say in 10 years, we will not reach 7. Let's say if we target 5. Now 5 means double, 2.75.
And 5% of India will be in.
One is double. Second, in 10 years, GDP itself will more than double. Right? So my classic view is insurance should be 3 times of what you have today in 10 years. Because of the multiplier effect. One is the penetration has to grow, and GDP is growing because 85% of the people insured are anyway underinsured. Protection gap is between 81 to 85%. Gap I'm saying. Means what? 15% are covered, and then adequate cover ka alag discussion. Right? So I'm saying if we have to become a developed economy in 10, 15 years, and I'm not going to that number, right? 7%. I think at least 3 times is the number we should look in 10, 12 years. See, in the past 5 years, it has averagely grown at 15%. Right? Now, if you get a stable environment and a conducive support environment, I think that's the number we should really look forward to. Double is so given. I think there's no discussion on double.
Okay. Ambitious and logical also, going by where we are as an economy. Before I let you go, I have some fun questions to ask you. What is the one thing about your job that you love the most? The one thing that gets you going every day in the morning when you wake up and you know.
See, over a period, I've been what now? This is my 26th year in insurance. So I'm among the few ones who were introduced to insurance in 2000 itself, when the industry opened. Over a period of time, obviously it's been a long period, 2.5 decades. My conclusion is it's a people's business. There's nothing in this business. See, as a CEO, I don't have any raw material management. There is no logistics, right? There is no plant and machinery. There is tech. We just spoke about AI, but it's not a heavy lifting tech like I'm building a NASA or a satellite, right? So I'm saying there is tech, but it's not the real tech, right?
Not deep tech.
What are we into? We are into a business which is all about communication, interaction, and people management. Who are these people? My employees, my distributors, and my customers, right? What is the job? We need to interact with each one of them on a regular basis. Now, why I like my job is I love interacting with people at large, right? So if you're a person who is happy talking to people, if you're a person who loves to interact with people at large, right? You're not If you're someone like me who's happy to, like I said, I'm traveling like crazy, meeting my people, meeting my distributor, that's the best part of my job.
Okay, fair enough. Tell us, what is the one thing about your job that you don't like the most? We don't use the word hate on the show. It's too heavy a word. I don't like the word hate. So what is the one thing about your job that you don't look forward to?
I'll tell you one thing which, again, by experience I come to know, not every day is going to be great. Correct?
Very wise thought to begin a day with.
not every day is going to be great, right? So the only thing you have to ensure on a bad day, how you navigate that day is most important.
Okay, but
so can you avoid that is what I'm saying, correct?
Okay. So my question is, what makes it a bad day for you? Tell me that. That is the one
See,
thing.
people at our level generally, what we avoid. Again, I tell my team, problems are going to be there. And I tell people who call themselves managers in their tag, if there is no problem, boss, you guys don't have a job. What you will manage if there is no problem? Right? So managers are there and management will happen. What we avoid and people like us don't want is surprises. You don't want surprises. Problems to hone wala hai. So how you deal with problem actually tells you about how people look at their job.
True, you're still giving me a very deeply philosophical answer. You're still not telling me what you
No,
don't
I told you, I don't like surprises. I don't like surprises.
Okay, so the one thing you don't look forward to surprises, and your business does throw up enough and more surprises.
Every day.
Every day surprises. Okay, fair enough. We will leave it at that. Alok, great chatting with you here.
Same here.
Thank you so much for being with us on the Brand Wall.
Thank you.